It's Equity News on Equity Access, your cross section of the stock markets and of developments in the Zimbabwean economy. A splendid evening it is to you. Ibn Mabunda signing in. Let's get on to business. Our news tonight, the Grain Millers Association of Zimbabwe held an extraordinary meeting to assess the impact of cyclone on food security for Zimbabwe. The event was attended by various stakeholders from private sector as well as from the government. The Minister of Industry and Commerce, Honorable Mangaliso Ndlovu, gave a keynote address bemoaning the devastation that was brought about by Cyclone Idai, as well as the ripple effect of the El Nino over the 2018-2019 agricultural season. He also highlighted low output levels in the country across the board and called upon private players to invest more in the nation's agricultural framework. Let's have a look.
While the exercise to assess the actual loss is in process, I believe there is need for us all, government and the private sector, to come together and help to rebuild businesses in the affected areas so that livelihoods are speedily restored. While the exercise, we consider our approach to the production of primary products such as grain. We are currently producing between 25 and 35% of our annual domestic needs in both soya and wheat. And there is inadequate supply of potatoes, milk, and other agricultural products. Yet it is well known that we have capacity to produce enough for ourselves and even to export the surplus. In this regard, I believe that the initiative by millers to support farmers is a commendable and critical intervention of the kind that we need at this point. Only through close cooperation between manufacturers of primary products and users of those primary products can we ensure and achieve self-sustenance. I want to implore other players in the private sector to take a leaf from this and consider various forms of integration and collaboration. Reconsider our approach to the production of primary products such as grain. We are currently producing between 25...
Also at the same event was Mr. Graham Meadow, who's the Deputy Chairperson of the National Wheat Contract Farming Committee, which is a subcommittee of course, the Grain Millers Association of Zimbabwe. While he also gave insight on the prospects of the winter crop. Again, let's have a look.
In order to at least give us something to target and something to aim at, we have been looking over the last few weeks very closely at what water is available, what irrigation is available, what farmers are able to do in terms of a winter wheat crop this year. And the three major contractors involved have and are prepared to commit a minimum of 15,000 hectares to a program of wheat this year. And it is anticipated that that hectarage should generate a minimum of 90,000 tons of reasonably good quality wheat for harvest in October, November of 2019. We appreciate that this tonnage is below national requirement and that in a year when we are trying desperately hard to substitute imports, it is possibly considered disappointing, but it is needed, it is important that we understand that 90,000 hectares in context, that 90,000 tons, in context. Last year, the national crop was 160,000 tons. If the private sector alone can generate 90,000 tons this year, and that can be complemented and supplemented by what will be produced by Command itself, we should at least get close to last year's figure, and that in itself is a reasonably good achievement in a year when there is a shortage of water for the winter cereal crop. It's also important to note that there is probably another 6,000 to 8,000 hectares of barley that is going to be grown by Delta. In order to Give us
is
something.
Old Mutual Zimbabwe, which is a listed company on the Zimbabwe Stock Exchange, particularly one of the top 10 counters that we have on the stock market. Today held an analyst briefing in the capital with the presentation of the financials for the year ended 31 December 2018. Well, interesting report that was actually presented therein with their revenue actually scaling as well as their profit after tax. But just before perhaps we get into the nitty-gritties of the financials, let me just show you what they're actually invested in so that you get an appreciation of what the firm is all about. They're heavily invested in insurance, investments, savings, as well as banking. And these would be what I would like to refer to as the juggernauts of these particular sectors in the country. Of course, in banking, they are also into there. They have control as well as ownership of CABS, which is one of the significant banks that we have in the country. Now, on to the financials coming from 2014, you'd realize they record their profit after tax of $11 million. 2015, 13.3. 2016 was a huge scale in profit after tax to $219 million, which was also twinned by $445 million in terms of their revenue, which is the top line growth. Then there is a dip in 2017. Now, when we come back in 2018, of course, there's a dip there in terms of the profit after tax, while, of course, the revenue continues to scale. Then, as for the 2018 year, as you can see from the graph there, their profit after tax scaling to $300 million, as well as their revenue scaling to $1.4 billion. And so you've got $300 million in profit after tax, which is quite a positive performance. And as far as the group is concerned, maybe just to also shed more light there, it has been an interesting season, which has actually seen them give growth prospects in that regard. I had a close up with the chief executive, Mr. Jonas Mushosho. Let's have a look.
I suppose our viewers and listeners will be aware that the Old Mutual Group is the largest financial services group in Zimbabwe, very diversified into banking, insurance, life insurance, general insurance, asset management, and other allied financial services. So the first thing about the Old Mutual Group is that it is well capitalized, and therefore it is well able to absorb the shocks that are in our economy. And it's a difficult environment. And secondly, we have been around for a long time, and therefore we have been able to build a solid customer base and are able to respond to the needs of our customers. But diversification is important in how we are able to deliver, because when some of our businesses are hurting, others are able to deliver, and that is what is really behind this solid, good performance that we have just seen in the past year.
Fantastic. You did mention the high degree of capitalization that the group actually enjoys. How strategic is that in terms of the group being able to actually navigate the way forward?
Well, in financial services, capital matters,
Right,
because it supports the liabilities and the risks that you are taking. We do have a strong capital base, and we are trying to leverage on it and use it to expand into areas where we see opportunities. And we think that, difficult as this environment may be, it does offer a number of opportunities, and we see a lot of them.
Okay, let's talk about this one, which tends to be a little bit touchy. Just recently, your parent in South Africa, Old Mutual, which is listed on the Johannesburg Stock Exchange, did actually discount the results from October to December at a rate of $1 to 3.3 RTGS. And then back home here, you have to report at parity between the US dollar and the local currency. What are your sentiments where that is concerned?
Well, I don't think that there's anything controversial about it, because everybody knows that there was a change of currency at some point in time. People differ. People want to think that it happened later rather than in October. Our group took the view that the change in functional currency happened in October, and therefore, in terms of IFRS, it is important, therefore, to adjust the results. The reason why the auditors are unhappy with the results that are not adjusted going back to last year is simply because IFRS requires us to do so. But I think that now lies behind us. We should focus on the future. I think the issues of currency seem to now have been dealt with, that there is a difference between the RTGS dollar or the local currency and the US dollar. and there has to be an exchange rate, and the markets will provide that exchange rate.
Okay, and of course, I couldn't help but notice the fact that you did allude earlier during the presentation that your foreign currency denominated assets actually beyond your foreign currency denominated liabilities. Would you want to shed more light on that?
Yes, it's just that we are a large group with a very strong asset base, and we do have within our asset base some US denominated assets that happen to be bigger and greater than our foreign denominated liabilities, which is a good thing for us. But part of it is also because of the prudent manner in which we have managed our business.
Okay, then in terms of the outlook, two key things. You mentioned the fact that we can expect a business reorganization, and then you also mentioned the need to actually get into the digital space. Would you want to shed more light on those last two items, should I say?
Yes, I think an environment like this requires a responsive organization. Over time, because we're a large group, our structures have become complex. We need to streamline our structures to make it more efficient, and we need to be able to respond to the dynamics and the changes. Our view is that we need to make our decisions as close to the customer as possible and as close to the regulator as possible. So the reorganization will help us achieve that. Digital. I think if you want to become relevant to your customers, you must reach them in the manner or in the channel that they prefer. And we do know that digital is one of those channels that will enable you to get to your customers. And we are going to be investing significantly within digital capabilities. I suppose our view.
Now, for an in-depth analysis on these and other issues, I'm joined in studio by our resident investment analyst, Anesu Chimvumo. Anesu, good evening and welcome to the show.
Thank you, Eben. How are you doing today?
Won't complain, you don't get better yourself.
I'm very fine, my friend. How are you doing?
Fantastic as always. Now let's cut to the chase. The Grain Millers Association actually getting to have an extraordinary meeting to look at the food security aspect in light of Cyclone Idai as well as the most recent El Nino. How significant is that in terms of the food security of the country going forward?
Well, first of all, I really like to commend them for what they've done, because I mean it really pretty much dispels a lot of panic that could come out of what has happened. Yes, for a couple of weeks prior to the cyclone, we had heard about shipments that were waiting to come into Zimbabwe in terms of wheat and the like. And since the cyclone, a lot of speculation did come in about people actually thinking that those shipments are going to take longer for them to come in. So shortages in the respective foods that do get that input were going to surface, and the EGM, yeah, it's pretty much something that I really like to commend them on. Now, on to a little bit more of technical stuff. Yes, currently we have been producing about 35% out in terms of output versus what we actually require.
In terms of your soybeans, your wheat, as an average figure.
As an average,
right?
Yes. So with the issue with Cyclone Idai coming in, there seemed to be something of an expectation of a decline in that, but then it seems as if Graham Murdoch did give us some assurance that in the winter season, when they're going to be farming their wheat, they're expecting themselves to match last year's output, and maybe if very fortunate enough, they might even surpass the levels of last year. Also, they through their own confidence via the investments that they've gotten from the likes of Delta and other contract farmers that are putting investment in their farming season, they are expecting a bumper harvest as compared to what we're expecting. I mean, the cyclone is not the only issue that they were going to face. There also was an El Nino that is expected, so that means they should be mitigating for the rainfall shortage that was going to be coming in. I mean, if they're saying there's investment that has come into that industry, that should mean that hectarage is going to be growing, and as well for them to have good yields, they also need to increase in terms of their irrigation.
Okay, but let's look at something here, Anesu. What gives this gentleman, Maddock, the confidence to actually expect, should I say, increased should I say
Yields.
output in that sense? Is that they're confident of their contract farming hectarage, the level of inputs, mechanization, in terms of even your herbicides, the quality of seed, a lot of things that they're looking into, which they actually expect to beef up our output levels. My question then would be, is this the time for Zimbabwe to focus less on the small scale farmers and actually more on contract farming, or should you try and bridge a gap between these contract farmers with such a great level of mechanization vis-a-vis our not so mechanized small scale farmers?
That's a very good perspective there, even. But I think with contract farmers being the larger portion of what we then consume in the nation, we would rather. I think it would be very, very prudent for us to really focus harshly on the contract farmers. No harm to the small scale farmers, but if we do focus on those, then that means we may have a good percentage in terms of the import substitution area that may be covered.
Right.
I mean, if you have your contract farmers pretty much suffering, what more your small scale farmers?
Okay.
So if you have a very strong contract farming hectarage thereabout, which is expecting to grow, that should give us a good percentage in terms of import substitution, which then reduces the torrent that the nation is facing in terms of the economy. I mean, less foreign currency within the nation. That means that means a lot of importing. So if we import more wheat and your soybeans and your barley, then that's going to put a lot of much pressure on the forex market. That's going to put a lot of pressure on businesses that need the foreign currency within the nation. I mean, the list can be interesting.
I realize. Okay, let's move on to our other story, which is Old Mutual. They released the financials today in the capital, and a plethora of issues actually discussed there. I would like us to actually get into detail where the performance of the corporation is actually concerned. First and foremost, let's talk about their growth trajectory in terms of their profit after tax, from $92 million in 2017, and they have almost tripled that. And now we're talking about $300 million in profit after tax. While as well their revenue has also scaled from just below $1 billion to $1.4 billion. What is your interpretation on that?
Well, in terms of revenue, I pretty much do commend them in terms of their non-banking investments, because non-banking investments in their revenues pretty much held the hugest chunk, which is about 72% of their revenue.
Right.
Non-banking investments had about $1 billion within that figure, which was a 56% growth from their prior year. Their prior year, they performed around about $570 million thereabout in terms of revenue that came in from non-banking investments. Now, non-banking investments, you'd find that within those investments, there's some dividends. There are also some financial assets, fair value for financial assets that go through the profit and loss. So with their with their fair value figures, actually, with the stronger amount there, which registered about $800 million, which was almost another 50% increase there, about northwards of 50%. That growth shows a lot of reflection of how the economy performed also in the last quarter of the year, where you find that the stock market was up 60% at the time. But then if we then factor in issues to do with your inflation that then closed the year at about 42%, it pretty much downgrades the level of value that they actually attained within the last quarter. So I would say that the last quarter really spared them a lot of growth in terms of their investment, non-banking investments. And then if we look at the second thing that then came in would be in the insurance business, where their net premium, which constitute about 14% of their revenue,
Okay.
Did slightly grow, but in that regard, they did enjoy the fact that their claims had gone up, and also that also there were some issues to do with how clients then claimed on their insurance.
I wanted to talk about something else that the chief executive so boastfully spoke about. He mentioned the fact that despite what has happened in the economy, he boasted of the high level of capitalization that the Old Mutual Zimbabwe Group seems to enjoy. How relevant is that for the group in turbulent times as these?
Well, it's very relevant for them, because I mean they do need the capitalization for them to grow. If they don't have enough capitalization within their books, then that means growth would not be very prudent for them, or it would be a worse off situation for them if they don't grow, because at the rate which inflation is going and the economy is suffering, they need to put their money into more assets that could preserve a lot of value. I mean, I do understand that they want to move into tourism now, where they're going to be building a commercial law in Hwange. They also are looking to have they're still trying to find out what sector of the tourism are they going to touch in on in Vic Falls. So that means these guys are looking to make sure that they have enough revenues that are going to be coming in assets that don't lose value as much. They're also looking into getting into a lot of digital into the digital space. I'm not very sure as to which parts of the digital space they're going to be touching, but then currently their fee commissions and their interests that come from transactions really spared their also some of the growth that they realized in their revenues thereabouts.
Now you seem to be touching on strategy, which is actually the direction that I was going to have us get onto. You just mentioned the growth in mobile as well as point of sale transactions from to $190 million, which was a 49% growth. And in the outlook, the chief executive also mentioned that there is this powerful or enthused drive toward getting into the digital space. How important do you think this is for the group moving forward?
Well, it's very important, especially with how you've highlighted that 49% growth, because if they don't move into the digital space, we are pretty much moving towards a very, very cashless and already we are in a very cash tight environment. So if they don't move into the digital space very much, then it would mean that they're going to lose out on some of the revenues that they can gain from that. I mean, look at a 49% increase in that area. I mean, that's pretty much a reason to how the economy was reacting last year, pretty much the last 6 months, where cash really got tight. People were now transacting pretty much on their mobile phones, using their ATM cards. Everything that they had to transact on, they had to use their bank cards or their mobile phones. I remember pretty much there was a drive as to moving into a cashless society that was really driven by the RBZ and the government. I mean, they were really trying to find a way they can cushion themselves in a situation that they couldn't actually wriggle themselves out of.
Okay. He also made an allusion to the point that we could expect some kind of business reorganization. Would you have perhaps any hints or direction that could take, or that still remains a mystery?
No, well, it is a mystery as much as yes.
Okay, I'll drop that. I'll talk about the fact that over the past reporting period, they mentioned that they were actually able to develop 1,000 in the 82 stands in Pumula South as well as Kulumani. That's very much Bulawayo-ish.
Yes.
So, what does that reflect in terms of the group strategy? And it seems as though that actually remains core of what it is that they represent into this particular trading season.
Well, I mean, if you look at how even Harare is placed, they've got a lot of assets that are in in properties. You look at your Westgate, you look at the new Eastgate Mall. They also have the Borodale Park, the new Borodale Park office park there. But it really shows me that they're really making sure that they have a lot of properties, that they're going to be putting a lot of investment in. 1,000 stands that have been developed that side. It gives me a sense and a direction of how they are making sure that their investments and their assets do keep the value of the business going forward. Because I mean, the economy is not very fluent right now, and most people, if not going to go into the stock market, would want to get into properties because that could that pretty much preserves value for a long time.
When you mentioned Eastgate, I got highly tempted to interject you there. But one of the questions raised by the analyst present was, okay, now that you've invested into this Eastgate Mall, what is the potential of this particular project, in terms of occupancy as well as completion? And there was quite a positive response from the panel that was leading the conversation there, to the effect that, well, there's been a 57% occupancy, which is actually one of the good records, or one of the best records that they've actually had since they actually got into commercial properties. And not only that, the building is not yet complete. So we're looking at a 57% level of occupancy, and then the building is not complete.
Yes.
So how much more when the building is actually completed? And one can only imagine what could actually come off that.
I mean, that structure is pretty much a better version of how you'd find no bad mouthing towards the Kwame Mall owners, but it's pretty much that it has that feel. And it has that target market, because I mean, it is situated close to a bus terminus. That's one. So there's going to be a lot of traffic that's going to pass.
So could we say that these targeting a lot of foot traffic as well as vehicular traffic?
Yes, because I mean, if you have 57% occupancy right now, that shows that the people that have occupied that space, they know that they can attract a market in that area. And the terminus that's there is pretty much middle level income earners to about high income earning suburbs. I mean, you look at low density to about mid density. I mean, from your Eastleys to your I mean, Chisipiti, Mandara, Borodale. That's where that terminus is. Okay. So you've got people that can be attracted towards that mall, vis-a-vis the Kwame Mall that is closer to your Copacabana, which has another specific target market in terms of the residents that use those terminuses.
Okay, well, thank you, Aneso, for the insights. We will just take a short break, and then when we return, we'll move on to the stock markets. Please stay tuned. Welcome back, viewers. It's now time for the Daily Dose, as we take a closer look at the performance of the stock market. Anisu, please take us through.
Well, today it was a positive day, coming up 0.85% for the All-Share Index, and the Industrial Index following suit by coming up 0.86%. Those two indices actually landed about 121.66 and 405.57 points in that respective order. The Minings Index stable after having come off on Wednesday pretty harshly. They did come off pretty harsh. Riozim and BNC had a fall in that regard. Top 10 index pulled up the market pretty much today, courtesy of your Econets 8% jump there about for it to settle on about 108.33 cents, while Old Mutual added about 1.03%, and your Citgo added about just half a percent there about. So top 10 index is up 1.19%. Gives us a graphical representation of what happened here. On 5-day trend, it's almost up 1%, because that's pretty much its biggest jump in the past couple of trading sessions, which has spurred it to be in the positive for once in a couple of weeks, which has pretty much trimmed down the all-share index to about 0.11%, while the industrials is down 0.03%. Well, you'll find that the industrials is pretty much the broader one, which then covers a lot of stocks that are not in the top 10 index. Moving on, if we just have a look at how the rises and fallers performed, we had about 4 rises and 5 fallers, 17 counters traded today, which had a volume uptick there about in the region of about 30%, if I'm not mistaken. Econet added about 8.28%. We've spoken about those. That's top 10 stock there. I believe that a lot of investors within Zimbabwe would have had the opportunity and chance to actually buy out some of the stocks that are being sold by foreign sellers. I mean, we've been having a very huge foreign sell position in terms of the stock market. So, OK went up 1.24% to 20 cents. Truworths was the worst performer, coming down 1.23%. Axia 1.21% for it to settle at 35 cents. Then if I just quickly move to my forex market, the payroll market did come up again to 4.13%, and the interbank rate is finally in the 3 zone, which was pretty much anticipated for the past couple of weeks. That's pretty much it from me. I don't know what you.
Thank you, and interesting development there. Well, thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website www.equityaccess.net. From Anissa and me, Danky, and have a great weekend. Ciao.